So we just got the fresh CPI data in the US today, and according to that, the inflation came under the expected value. The expectation was 3.3%. The actual came at 3.2%. The core inflation, which is excluding food and energy, is unchanged. So the month-over-month inflation is 0, same as it was in September. So very shockingly, unexpectedly, it came down less than what was expected, because the previous two readings we saw, it was actually showing an upward trend. So people were expecting this is going to be a trend going forward, but now this has came down significantly. And the main reason is the gasoline prices, because of the oil price reduction in the global markets. But after that, the market rallied. So S&P, the best day since April. Dow Jones, 500 points. Today, big move. The yields came down around 20 basis point, 10 years and 2 years. So that's a massive move, right? And the reason is there's so much distortion in the economy that good news is bad news, and bad news is a perceived good news. And based upon that, the market is rallied. And let me tell you, why this is happening. I'll explain to you. So stick around. So when the inflation came down, it came down a little bit, slightly less than the expectation. It implies that the Federal Reserve is going to continue pausing the rates, or perhaps start cutting the rates very soon, which will be good for stock market, because stock market is like a patient that requires heroin injection every time in order to move forward. Okay, so when the Federal Reserve is going to cut rates, which means they're going to lose their monetary policy, restart the QE program, and cranking up the money printer to pump the liquidity in the market, which will basically continue popping up this bubble one more time. So that's the narrative. That's the narrative being sold through the mainstream media to the retail investors, which is why we're seeing this rally. And there's a big flaw in this narrative, and I'll explain to you. The flaw is basically that Federal Reserve controls everything. Federal Reserve controls the interest rate. Federal Reserve controls the economy, which is why people are thinking that Federal Reserve is going to help us continue popping up the stock market bubble. And here's the truth about that. Federal Reserve doesn't really control anything, let alone the interest rate, because Federal Reserve only controls the federal funds rate, which is the interbank lending rate between the banks themselves. It actually influenced the short-term lending rate on the treasury market, like 2 years treasury. That's it. It doesn't influence anything else. Like if you look at the 10-year treasury in the US, 30-year treasury, their yield is way below federal funds rate right now. So they only influence the short-term lending rate. That's it. They don't control anything else. And people think that they are going to inject liquidity. That's also a very false narrative, because the liquidity is pumped by the commercial banks. The commercial banks are responsible to create new money. M2 money supply is being pumped through commercial banks through extending the credit, right? So yes, federal government, US government, they can inject new money by running fiscal deficit, but that fiscal deficit is actually consumed by selling new treasuries in the market, and that market is consists upon non-banking entities, banking entities, as well as Federal Reserve. Yes, Federal Reserve has some element to it, but the major source of money supply comes from the commercial banks. So when you understand that, then you realize this whole narrative of Fed will come to rescue is completely false. If you look at the historic evidences, the last 100 years of data that shows when Federal Reserve raised the rates and then pause and then start cutting rates, it's actually reactive mode. So Federal Reserve works in reactive mode, where they take actions when something happens in the economy. So if something happens, like recession comes, some sort of an economic crisis happen, then they react, and then they try to influence the market by reducing rates and running those QE programs and trying to stimulate the economy. So they don't really do proactively, they do it reactively. So thinking that they are going to pump the market so that we can start putting money in the stock market so that we can rally, that's a false narrative to build upon. So it's a very, very incorrect investment strategy. It's purely gambling. And I think people should be worried about that, because this is a short-term rally. It tries to suck all the idiots in as much as it can, and then you will see after a few days it will start dumping those idiots. So that's really what's happening in the market, right? And we will see this, the CPI in Canada is going to come next week, and most likely this will also come down a little bit because of the gas prices. The oil prices is coming down. My suspicion is Bank of Canada will not raise the rates. They will keep it at this level. I don't think they are in a position to cut rates anytime soon, because as soon as they cut the rates, the housing market will rally. Nobody wants that. So I think this is going to be a long wait before people will realize that the rates are going to get cut. Not this year, maybe not next year. We'll see when things will change a little bit. We'll see. As I said, the Federal Reserve and other central banks also, they react towards an economic crisis. We haven't seen the economic crisis yet. Yes, we are seeing slowly, we're inching towards it. Every major company is announcing layoffs, but we haven't seen the unemployment rate picked up to like 8% yet. Okay, this is still very, very low as per the stats. Now, that's another story whether those stats are accurate or not. That's something we have to talk about some other time. But if we take that stat, that's not showing us that we have economic crisis right now. So until that happens, there is no case for rate cuts. And let me know what other topics that you want me to talk about. I'll be happy to take your feedback and then provide my view and my opinions on those topics as well. So let me know what you think. Put your comments down below and don't forget to subscribe. Okay? Take care.